Rick. Ladies and gentlemen, Rick Newman, who many of you already know, and some of you may know from Yahoo Finance, was our moderator last year, and he's agreed to come back this year and write a lot more stories about climate. We don't know what he's going to say, but he's in charge now, and I'm not saying anything.
That's right. So let's get the other panelists up here. I thought you were going to help me out by making the introductions, Bob, but I'll go through that myself. And Bob, am I timing myself on this?
I will time you.
You're going to give me a 5-minute warning?
I will give you a 5 minute.
Great. Okay, we've got about 25 minutes for this, so I told the panelists everybody needs to speak very fast and not for very long, and we're going to hopefully have a really good conversation. So I'm going to very briefly introduce everybody, and then we'll get right into this. So Matt McAleer of Cumberland Advisors to my left, Jim Roemer, president of Best Weather, and then Patty Healy right over there. The topic here is economic opportunities in all this we've been talking about. I'm going to put a slightly more callous spin on that and frame this as how people can make money from all this turmoil we've been talking about. And I think that's perfectly fine because where there's a profit motive, there's going to be capital coming in. Everybody here probably understands that this is not something governments can fix alone. There needs to be a lot of private sector involvement here. So I'm going to talk with these guys about how we get there. So Matt, I'll start with you. What are the ways to make money and I guess to lose money with regard to all the changes that are going to be happening in the economy because of climate change?
Probably an unanswerable question. So in terms of how we try to approach the energy portion of climate change, and that's perhaps the spot I'll lead to. Jim's more on the commodity side and can discuss that. But one of the things we talk to clients about and even try to allocate capital towards is not having an extreme view of energy. You know, Carlos mentioned a few things that resonated with me and that we talk about in some of our strategy and trading meetings. And, you know, there's been a bit of a backlash against the big energy companies. And the extremes on a bell curve, whether it's politics or policy, you almost always want to just chop those extremes off. Get rid of those 10% on both sides of the bell curve, and then you can start making progress. So I just mentioned in terms of investment-wise to try to keep an open mind and remain flexible. For example, let me read 2 quick quotes, and this will take 1 minute, and then I'm done, that I thought you'd find interesting. The key being always try to read and speak with people 2 to 3 times more important than yourself, right? That's at least how I try to follow along. Just want to read a quick note out of Physics World. The problem of commercial utilization for the production of power through solar radiation, the wind, and other intermittent natural resources is a double one. The energy of the sources must first be charged. We do a pretty good job today of that, by the way. Secondly, it must be stored so to be available at the proper time. Now, think about that. I think that's nothing that any of us wouldn't agree with. The funny thing is, that was written by Reginald Fessendal. Do you know who he is? Yeah. Reginald was Thomas Edison's main assistant and chief chemist at Edison Electric. That quote, and that's a direct quote, was from September 16th, 1910. It could be used today and is used today. Storage is a situation that technology will eventually solve, but traditional energy is needed to provide the runway for alternative energy to blossom. And I think some of that that I call it the sector bell curve, those extremes, the people marching for, Carlos mentioned it, for ridding ourselves of oil and gas. All it does is get media attention. It's not reasonable. And when I was impressed this week in reading Shell Oil's quarterly report, they're up to 18% of next year's budget in alternatives and carbon capture. That might not sound like a lot, 18% of their budget. 5 years ago, they were at 3. Just 5 years. That's a blink. So I think Carlos was right, and I think we're seeing some positives. 2021, which is the latest data available, renewable alternative energy was almost 10% ahead of what was forecast usage-wise. So some positives out there, not all negative.
Matt, what's the actionable item here for ordinary people? Is it don't participate in the bashing of big oil? Don't worry, it's okay to invest in major energy firms, or what exactly?
Yeah, I mean, if energy's part of your portfolio, the automatic pushback against Chevron, Exxon, Conoco is probably going to cost you money, if that's your natural pushback.
And am I correct that this really drives environmentalists crazy? Energy was the best performing S&P 500 sector last year?
It was, don't forget, you're sitting on 3.5%-4% dividends there as well. In terms of energy, it was coming off a couple of years of really getting beaten up too, though, right?
Jim Roemer, you are a weatherman and an investor, so what kind of opportunities are you seeing?
Well, first of all, to lose money, just listen to my advice, I guess. Yeah, I do commodity analysis and forecasting for farmers and traders around the world. I have a newsletter. Used to advise hedge funds in New York. In the natural gas, grain, and also soft commodity space like cocoa and coffee, which are very much affected by climate change along the tropics. We've seen higher prices in many commodities because of the warming planet. Some of the biggest investments, actually, weather-related, that are very cyclical, have happened 8 of the last 10 years. You can actually buy natural gas. There's an ETF, UNG, in the spring and sell it after the hot summers we've had. Prices tend to rally because of the record heat, for example, in London last summer, and a combination of the drought and record heat we had in the United States. And this has happened 8 of the last 10 years. We've had a 80% rally in natural gas in the summer. Air conditioning usage, mostly natural gas these days, particularly in Europe. And then in the winter like this, you could actually sell natural gas. There's an inverse ETF called KOLD. This has worked like clockwork because of the warming oceans and planet, particularly in 8 of the last 10 years. I can talk more about that later. But though I know both of you probably follow the ETF space very closely, there's a new ETF called Critic. Obviously, climate change is critical on the planet to resolve and adapt to it. It stands for critical, it's actually trace metals, a trace metal ETF. And that's just started trading. And trace metals are very much used in electric cars, for example. Lithium is not one. Lithium is part of the periodic table. Trace metals are those found in China. And also Greenland, which is now obviously melting, has potentially billions of tons of trace metals that will be helped to generate and be used in the global green economy for decarbonization, electric cars, as I just mentioned. There's also an ETF called, I think, HDYR, a new hydrogen power ETF. Now, India just invested $4.5 billion to go perhaps zero carbon in the next 20 to 30 years. So, yeah, we're obviously really the role model for the world, but both Costa Rica and also India are taking major steps right now towards decarbonization, and as a result, we're seeing more and more investments in some of these other ETFs like HYDR, hydrogen. Hydrogen is also used as a byproduct for green ammonia. What's that? Well, it's a way to really solve the farming crisis and soil erosion and all the fertilizers going into the oceans and the rivers, destroying our planet. This is going to be an alternative green hydrogen, which is green ammonia, which is a byproduct of hydrogen, and there are ETFs and investment opportunities in those as well. So this is going to continue to happen over the next, few years, new opportunities coming up.
So in the graduate, it was plastics, and here at CAC 23, it's hydrogen. Hydrogen, young man?
Hydrogen. Yeah, if anybody has any questions about some investments or questions about where the other opportunities are going to be, I deal mostly in commodities, have clients around the world, but definitely, as I mentioned, there's going to be some ETFs that are going to be probably great long-term investments as the world goes toward more green technology, not just EVs. I think lithium's used mostly in electric cars. Anyway.
Patty, you're deep into the insurance markets. We've heard a little bit about insurance here. You would think that insurance would be a really important, like, signaling and price signaling mechanism, because that's who gets stuck paying for all this stuff, and therefore they have to be the ones who figure out how to price it. What is happening with regard to insurance, especially in a place like Florida?
I want to add disclosure in two really exciting topics, insurance and disclosure, and how those two things can lead to resiliency. And then on the other side of that, the more resilient you are, hopefully the lower your insurance costs, and the better and more interesting your disclosure will be to people. And at Cumberland Advisors, I look at municipal bonds most of the time across the nation, so that's kind of where it's coming from. And I also wrote a piece on the insurance market in Florida. Specifically wanted to tell people about the Florida Hurricane Catastrophe Fund and Citizens, both of which, well, the Florida Hurricane Catastrophe Fund was originated after Hurricane Andrew to provide reinsurance to insurance companies to encourage them to stay in the state because the losses were so severe. Other states have done something like this. California has a California Earthquake Authority, which after the Northridge earthquake, back in the 90s also, they set up an insurance authority to get earthquake insurance for people. And we also have Citizens. But in Florida here, the thing that will fund, if there is a big event and there's not enough capacity in Florida Hurricane Catastrophe Fund, Citizens, or even FIGA, which is like, if a insurance company goes default and you need to have a claim paid, the state will be able to make that payment. And the source of that comes from all of us. Anyone that has an insurance policy here will pay an additional assessment if that in fact is needed. So that's just a little bit of background. So insurance in Florida, I think we've kind of all heard, it's been in the papers. In May, there were some changes made to our insurance here in Florida, and in December, even more. And one of the big problems, in addition to these storms causing more and more damage, in addition to what we talked about before, the longer lingering storms where there's floods where people don't even have insurance, we have I think in the state of Florida, the state of Florida has like 9% of all insurance claims, but the lawsuits associated with that are at like 97% of the nation. So legislation was just passed in December to reduce the amount of claims, or hopefully reduce the amount of claims. It had to do with people assigning their rights to the insurance claim to a roofing company, and then lawsuits would continue from there, and the insurance companies have to pay double. They have to pay the litigation costs for both sides of the claim. So, excuse me. The legislation passed is now saying that you can't have assignable contracts. You can't assign your insurance rates to a lawyer or to a roofing company. And then there's, I think it's future storms, and there's like 5 years to claim the thing. So it's going to take like 5 years but it's going to start reducing our expenses here. Well, I think we have very high insurance rate, but like in Oklahoma, some of their windstorm stuff is more expensive, but they have insurance companies in the state. I guess they must manage something better, but we're not the highest. And then so that should make our costs go lower in the future. However, just know that there's like an underlying tax or an assessment to people if we have more expenses from the storms and from litigation. So that's a good thing that happened. And then just on disclosure, it's becoming more and more important: climate disclosure, environmental, social, and governance disclosure. And for municipal entities, they now need to report their financials in machine-readable form. Most municipalities don't have this technology. They're working towards it. They're actually pushing back on it, but they now need to do it because it was part of the Omnibus bill passed at the end of the year. So over the next 2 years, municipalities will be disclosing their information in electronically readable, machine-readable form. It may take a big startup cost, but over time, it should reduce the expenses of doing the financial reporting. And as we've all heard, there's not enough people that want to work at municipalities, so this will help reduce the headcount and bring better information. If municipalities have better information to when they go to the bond rating companies or they go to people that have impact investing ideas, then they will have much better information. And it's all about data, the amount of data that municipalities collect or the data that certain companies can collect on municipalities. It's growing exponentially. So that will make your investment in a municipal bond in a city, say like Miami, you'll know a little bit better about what's going on. So it will make things more resilient for their financials. And so that's where I think there can be some opportunities.
So we're talking about ideas and opportunities here, and the only mention of ESG, environmental, social, and government, was with regard to this technicality, this basically this compliance technicality. Nobody said, oh, I recommend these ESG fund and so on. Maybe you're not allowed to do that in Florida anymore. I'm from New York, so people seem to be kind of spooked about advocating anything like that here. But this has also been kind of a dubious idea from the beginning. So Matt, you talked about energy. That's almost like the opposite of ESG. What is your thinking about ESG ETFs? Both of you guys, actually. Environmental, social, and governmental focus, which is sort of a way of thinking of virtuous companies that are doing more, or at least trying to make it seem as if they are doing more than others to combat global warming and other issues. Is this still a good investment idea or not?
I'm not really sure about ESG investing. I mean, I think a lot of companies are forced to buy these stocks, and you know, it's against their sort of long-term plan. And I think individual ETFs are not necessarily ESG investing. Like I just mentioned, hydrogen, certain areas, trace metals, for example, seem like a better investment to me, anyway, longer term, than trying to say Blackstone's fund that's mostly ESG right now, which is not necessarily true. I think it's camouflage. A lot of these companies trying to get around that, pretending to be ESG companies, and many of them are not. Right? Maybe you can talk more about that, Matt.
That's part of the problem, is telling what's real.
Yeah, right.
Yeah, you know, you have companies like iShares, like State Street, great old companies that have million-dollar marketing departments trying to figure out ways to create AUM, or asset flow, into their house. So while ESG, in terms of what it's trying to represent, has some very good thoughts and ideas, you know, it's become almost a marketing gimmick. Right. Where you look at an ESG ETF or mutual fund and look at the index it follows, and it's just about the S&P 500. Except the S&P 500 is charging you 3 basis points, and this ESG fund, which maybe it reweights a little bit, is charging you 75 basis points. So I think where ESG has gotten a little bit of a knock is on the term you sometimes hear, greenwashing, right? Patty, you would know that better than I. But that means you're just trying, you know, these companies and funds will try to just mimic anything from a marketing standpoint.
Could we get a microphone over here, please? And while we're waiting for that,
Yeah, I have a quick comment.
Patty, I want to ask you, I want to just go back to insurance companies really quick. Are insurance companies pricing climate change risk correctly? Or insurance companies themselves possibly at risk because they're mispricing it and all the way through to reinsurance? That could be a thick topic. We're almost out of time, so.
Just quickly, and it'll dovetail with something else I want to say. insurance companies have always been looking at risks and in detailed level, like looking down to not just the zip code, but like the property parcel and things like that. And when I started getting ESG information from all these various providers that are out there trying to provide ESG information, most of them were from catastrophic or CAT companies, basically, catastrophic insurance companies. So the amount of information that they have, and it's their business, they need to stay in business. So I hope that they're pricing the risk correctly, and if our prices of insurance have to go up, it's a reflection of the risk that we have. And that's why the state of California had to move in for for earthquakes, and why the state of Florida had to step in for our insurance here. It behooves the government to kind of do that because you want to have economic development. You want to have people living here. As we get richer and smarter with these things like this, we'll maybe understand the process and maybe bring our insurance costs down. So I talked about the data that comes from all the insurance companies. So I want to say that ESG or impact investing, you can have any impact you want. It's not good or bad. It's up to what you want. But ESG analysis is different. We look at what the environmental risk to a company or a municipality is. We look at the social risks, affordability of housing. We look at the governance structure. Is that good for the long-term resiliency for paying debt service, let alone, their insurance, which actually there's, worries about that, whether water and sewer entities can pay for their insurance. So I just wanted to put it on ESG kind of on it's not just impact, it's what everybody's looking at for risks and how are those risks mitigated.
Let's try to get to this question here real fast.
I was just going to say that maybe it's a matter of that whole is ESG, right? All right, ESG. I didn't really relate to that. When I was looking for an investment for my daughter for like a long term. She was gifted a little bit of money, and I looked for I Googled global warming solutions. My goal was as an entrepreneur, I'm thinking the companies that are going to come up with the solutions going forward, that's going to be the new, that's like the new big industry, right?
Yep.
Over the next 20, 30 years.
Yeah. So Jim, I'm just going to, we're just short on time.
Yeah.
So Jim, why don't you take that when you were trying to get in on something else. So answer that and whatever you meant to say before.
Like Microsoft, obviously been around forever. I think Bill Gates, though retired, just started I think some kind of fund. I think his company's called Terra Energy. He wants to build nuclear power plants. But I don't know if nuclear is really the solution in the future. But there are investments in some of these major companies like Microsoft that are investing billions into climate change solutions. Pat, I want to ask you a question. You mentioned, maybe I misunderstood, insurance rates could actually come down. Well, Bob Bunting's forecast, which have been absolutely spot on for years, continues to be correct with all these hurricanes he's been forecasting. Rates are going to be going up, right? So how do insurers pass this on, say, to Lloyd's, to reinsurers, to offset risk? Is that going to continue, or is there going to be competition among insurance companies to bring rates down? Or
Microphone.
Oh, over the years, insurance companies start up other insurance companies and other investment vehicles in order to get additional capacity. So there's also these, they call them sidecars. I don't know how popular they still are given the amount of risks that we've had, but you can invest in a security, and it's paying you a certain rate based on an underlying stock that's in the security or a pool of loans. And then if there is a disaster and that those assets in the pool need to be sold, you kind of lose out. But in the meantime, you're making money on that. So that's another way that insurance companies come up with additional capital.
do you think in the future that, God forbid we have another 3 or 4 more Category 5 hurricanes in Florida and sea level rises, Bob's been predicting, rates are not going to go up?
Rates are going to go up, and those assessments are going to go up. So, and that's on whether you have a flood policy or not. It's on most P&C and policies within the state.
I'd love to end on better news than that, but we have to stop, guys. Thank you to our panelists.
Thanks, Rick.